This video is an introduction to the affordability calculator and helps determine if the taxpayer and/or any of the taxpayer's dependents qualify for an affordability exemption. So the first thing we need to do is put in the taxpayer's name. John gets around. Tax year, make sure we're on the correct tax year. And the filing status, let's say head of household with 2 dependents that we're claiming for exemptions. And check to make sure that we're using the proper part of the United States and whether or not the state expanded Medicaid. This all affects the filing thresholds and various federal poverty line figures that are used throughout the calculator. The next thing we need to do is put in the household information. There's 2 different tests, a household test and a gross income test. The household income test uses these upper entities that come directly from the tax returns for the taxpayer, spouse if there is one, and for any dependents that are required to file. If they're not required to file, you can ignore them. If the household income exceeds the filing threshold, there's another test that's made, and that's the gross income, and that's only for the taxpayer and spouse, but it also includes some additional information. So both of these tests can be made by entering the appropriate figures into this table. TaxSlayer actually does a pretty good job with this, so it's not one of the key features that makes this calculator particularly important, but it will do that calculation and give you the response. So let's say for this family they have an income of $50,000, and let's say nothing else just to keep it simple. And what you do is after you've gotten all these figures in, you do the click to test and a response comes up. And this is one of the more complex responses. In some cases it'll just simply carry on, there's nothing special. In this case there's another situation that can occur if the family member has not been offered any employer insurance, and if they're not already insured by some other insurance plan, and we're not talking here about the marketplace. We're talking about an outside company that you go to and buy directly from, or anybody that is eligible for government insurance, like Medicaid or CHIP or Medicare. Then if any of those things occur, we need to go ahead and do the test. But if none of those occur and none of the family is insured, then it turns out that if we are below 249% of the federal poverty level, then the amount of PTC that they're eligible for will always cover what the cost of the bronze plan is up to the 8.16 affordability threshold, which is the threshold for 2017, so that it'll always be affordable. And if you don't believe that, you can go ahead and continue to go through and do the test. This just simply says if you're in that situation, you don't even have to test because the affordability won't apply to those folks. However, we're going to try some examples that do have employer coverage, they're already insured, or they're eligible for government insurance. The next thing that can happen is, in some cases, money can be withheld from a taxpayer's salary to pay insurance, but not then reported on the W-2. And so what we need to do is add that back into the annual income of the family, because that affects the household income and then the affordable level threshold. Again, we don't see very much of that, so I'm not going to bother with that, but it just simply adds to the income. The next step then is to see if any of our affordability options exceed the threshold of 8.16%. There's two ways of doing this. One of it is using the annualized amounts, which is actually the way the tax code is written. An annualized amount means that for whatever monthly payment is made, then for that month, you multiply by 12, and that annualizes the cost of insurance for that month on an annual basis. But since most employers and most of the places we have to go and find out what the bronze and silver plans cost, then they use the monthly rates. And so I generally like to use the monthly option for this worksheet. What this worksheet is going to do, it's going to take a look at what the taxpayer situation is in terms of whether they have insurance, what kind of insurance, da-da-da-da. Talk about more about that in a minute. If they were offered a self-only policy, then that's the first thing that's tested. If they were offered a family policy from their employer, then that's the next thing that's tested for eligibility. And then if there was no employer offer for that individual, then we have to go to the marketplace and find out what a bronze and silver plan would have cost to determine what the PTC would have been, and that would then determine whether or not the insurance would have been affordable had they signed up for it. And that determines whether then they get the Code A or Code G exemption. So back up here in the instructions, and you need to read these fairly carefully. The first line, we have several options. Choose no for anybody that has no other exemptions, they have no coverage, and they're not eligible for government sponsored coverage. In other words, they are not insured, period, and not eligible to be by the government. Use EXM for any person that's covered by another exemption. Use MEC if they already have insurance for the month being tested. In other words, minimal essential coverage. If they have MEC through their employer, then we need to go down and look at some more information before we do that. If it's by a government-sponsored plan, like Medicare, Medicaid, and so on, don't use MEC, use Gov. If they're eligible, or if they took government insurance, use Gov. Always use Gov for those cases. And that's what the next little bullet item says. So on the employer offers, there's several things we need to do. Always put in both the cost for self-only and for family policy offers, what those would cost. And if the insurance is provided by the employer at no cost, put in 0, because that's the cost to the taxpayer. And then, if they took that coverage, click the little box that's to the right of that option. If they did not take that coverage, then don't take the box. So let's go down here and take a look at what needs to be done. Affordability threshold is $340 a month. That's simply that figure up here for the 8.16% divided by 12. That's all that is. But it's repeated again down here because this is the table that we're going to be doing our calculations in. So let's say that the taxpayer was offered a self-only policy for $300. Put the $300 in, and perhaps they were offered a family policy for $400 that covered all of the other folks in the family. Click to test, and the first thing that's tested is the self-only policy, $300. It's below the threshold, so no exemption. The family policy, however, costs $400. That carries across to all the folks that were included in that policy. Because that is higher than the threshold for that person, then they do qualify for a Code A exemption. If one of these folks, for instance, it was not included, maybe it's grandma that's living with you, then you put an X in their box, and that prevents the family policy from filling that box in. And then when you do the click to test, you don't know what's going on with grandma. If that was a family member that had no insurance and was not covered in the family plan, then we do need to go and test. So what we would do, we would go down to our Marketplace Coverage Affordability Worksheet. So we would find out what the cost for the bronze plan for that person would be. And let's say it was $200. And what the second lowest cost silver plan would be for that person. Let's say it's $300. And then we can return to the worksheet above and click the test button, and we can do that just by clicking this one. That takes us back up here and essentially clicks that button. It fills in the amount of $200, and that turns out to be below the threshold, and therefore it's affordable. So no code exemption for this particular individual. So let's try another situation, and let's say that there was no self-only plan offered, but there was a family plan offered to this family. If we do the click to test, then we notice that it's unaffordable for everybody and Code A exemption applies. But let's say that the taxpayer took that family plan, even though it was considered unaffordable. That's okay. Then what happens is that the plan changes to MEC because they are covered. We click to test, and it carries across. Everybody else has changed to MEC, and no exemption applies, which makes sense. They took the family plan, and everybody was included, and so not a problem. So what happens if later on in the year something happens to the family situation, that things get rather reconfigured, and maybe the taxpayer loses their job, one of their dependents moves out, maybe graduated from college, and maybe grandma moves in. So the situation has changed considerably. How do we deal with that? Well, let's say that our situation that we just had held through April. So we want to hang on to that and not change that. But in May, this is when all this happened. The taxpayer lost their job, so they lost their insurance. Maybe they weren't insured anymore. None of the children were insured. And grandma moved in, and she was covered by, she could have been covered by Medicare, but whether or not she signed up or not, let's say she did not sign up, then we changed the situation to the current one starting in May, and again click to test, and now we don't know what the situation is. We have to go to our marketplace to find out what the cost of the bronze and silver plans are. So we can go down here, and there are several places you can go. Healthcare.gov if your state does not have an exchange, or you can go to your state exchange if it has one, and you can change what that URL is for that for your state, and it'll save it as a cookie on your PC. And in our case, in Colorado, sometimes we can't get that information. Either the site is down, or maybe we're looking for a year that they don't have that information saved. As a last resort, we often go to the Health Pocket. If you have another favorite that you like to go to, you can always add it to your flexible one in the middle here. So let's say that we go to our marketplace and we have discovered that for the taxpayer and the two dependents, for a bronze plan, it's going to cost us $400. And for the silver plan, for the taxpayer and the first dependent, because Grandma is eligible for government insurance, Grandma is not eligible for a PTC, so she's not included in the silver plan. So maybe that only costs $200. We can click to test. We find out that it's going to cost the full $400, and that is unaffordable. So these folks all qualify for Code A exemption in May through December. So one last little tidbit. I had mentioned that when you're dealing with partial months, there's a special thing you have to do to annualize the monthly payments. And what you have to do is, if there's a partial payment during one of the months, annualizing that is a little bit tricky, because you don't know exactly what that is going to mean in terms of an annual amount. It's not just simply times 12. So the way the IRS has told us to do that is you add up the total premium amounts for the period that you're involved with. It might be only 2.5 months or something during some interim period of time. And you enter that in perhaps as say it's $300 for 3 months and $100 for a partial month or something like that, for a full $1,000. And the number of full months then that are covering the period is only 3. So you put in that, and what that says is that you spread that partial month over the 3 full months, and the amount that you would then enter would be $333.33. But you put it in for all 4 months. In other words, including the partial month. What this does is raises the amount per month to a point where you may then qualify for an affordability exemption, where you wouldn't have if you simply put in the $300 for the 3 months and a small number for the 4th month. So kind of a tricky thing, but it's how you have to annualize it if you end up with some kind of a partial month. Just a little tidbit. We don't see very much of that, but it's there if you need it, and it sometimes can help. So that's all there is to the calculator. It's fairly straightforward. It gets a little tricky in terms of the changes in situations during the year, but fairly straightforward if you're covering the full year and you just simply have bronze and silver plans to look up, put them in, it does the calculation, and it figures out what it would have cost had they signed up for the insurance and whether or not it's affordable. So enjoy.